Welcome to the last full week of February. Time is zipping by here, it seems like. Welcome to the Market Update Desk with Scott Riley, February 20th. We had the holiday yesterday. We were still working here at the office. Hope everybody got a little bit of a breather from their work schedule yesterday and enjoyed maybe just a little bit of downtime. We wanted to go over a few things today and go into a deeper analysis and understanding of what's going on with inflation, why we're seeing what we are, in the headlines at least, and then talk about maybe where we really are with inflation and where we're headed. One thing to talk about today, CoreLogic released their rental report for the month of December. Showed that rent prices were up 2.8% year over year, and that's a slight increase from the 2.7% that we had on the previous report in November. Now, the latest CPI report, which was the other week, showed shelter cost rose by 6%, which was 3.2% higher than what we actually are seeing because of the lag effect with rent. And we've talked about this. Now, when you multiply that difference, the lag effect, by the shelter weighting in CPI, which is just about 44-45% of total CPI, it shows that shelter in real time is being overstated by roughly 1.4%. It may not sound like a lot, but that's a big effect on overall inflation. Now, that would actually mean that the core CPI would be much closer to 2.5% than 3.9%. That's the power of the shelter component within CPI. Now, another analysis of this, which we've talked about, Truflation, gives a very different picture than what we're seeing in the media and the headlines. And unfortunately, what the Fed is taking a lot of direction from. Now, Truflation, it's another measure of inflation that shows that trending much lower than the CPI at 1.67% year over year. Now, instead of looking at 80,000 data points, which CPI does, Truflation actually looks at 10 million, and it doesn't use a lot of the imputed numbers that come within CPI, such as owner's equivalent rent, which is a very general statement that they ask people, if you had to move, what would you rent your house for, not including utilities? It's a very non-scientific analysis of that, and that makes up almost 30% of the shelter cost. So this Truflation showing that we're really probably at 1.67% than what CPI is showing at over 3%, makes a drastic difference in what the Fed is coming up with monetary policy, specifically when it talks about rate cuts. So we wanted to touch base on that, being a little bit slower day today. Another thing that came out today was University of Michigan consumer sentiment. Now, consumer sentiment reading for February shows that consumers' confidence ticked up by 0.6 of a point. The big reason for this, realistically, is the stock market, which has been on an absolute tear for 6 to 10 weeks now. And people are feeling wealthier and have a better outlook because of that. Now, one thing to look at, though, is Citibank has a Citi Panic Euphoria index. What that does is it shows euphoria people are feeling or panic people are feeling within the market. Now, the index is on the cusp of entering euphoric territory. It's because of the stock run-up that we've got. And according to Citi, euphoria levels generate a better than 80% probability of a stock market being lower within a year. So we've seen this big run-up, a lot of wealth buildup. There's a potential that we're going to see a retreat within the stock market, and then this consumer sentiment is going to turn a little bit. So it's a very important thing to start to watch. Now, in conjunction with this, Wednesday after hours is a very big factor within the stock market. NVIDIA, the chip maker, is going to be reporting their earnings for the previous quarter. And this is something that is going to drive the market after hours Wednesday and going into Thursday's trading. This is a Very, very important number that the market is looking for and looking for direction of where it's going to go. So pay very close attention to it. Now, the week ahead, we got a lot of information coming out. The Fed meeting minutes from January 31st, where the Fed tried to manage pushback on the markets for future rate expectation cuts, is going to be coming out. And this could prove to be turbulent and volatile. We also have a bond auction on Tuesday, Wednesday, mortgage applications, and then a 20-year bond auction. Thursday, initial jobless claims and existing home sales. So we've got a little bit going on now. We're at a very pivotal point within the mortgage-backed securities. So mortgage bonds, they've been trending just beneath resistance at 100.428, which is a very important Fibonacci level. If we can break through this, and it is a difficult level to get over, though, we do have some room to the upside for potential better rates. So we're going to have these ups and downs this week, so we'll keep ahead of it and keep you updated. Give us a call for any questions to get pre-approved, 616-293-2189. Have a great afternoon.